I think we do look for the fact that you have some constraints on the US economy, such as the labor supply. You are going to get some fiscal stimulus come through, and it could be more front-loaded than being expected. And that does suggest that, while we're going to go through that period of a cooling in the US economies, we do expect to see the effects of tariffs develop over the northern summer. As we enter the end of the year and into next year, I think you're more likely to see the impact of that fiscal support coming through and actually potentially lifting that growth outlook a little bit. And that's where we start to think about, why inflation may be a little bit higher over the course of the end of this year and into next year. And again, what keeps the Federal Reserve in check. I think that the front-loading nature of that stimulus is something that we do think is about being quite important for offsetting some of those recessionary fears that have crept into the market. But again, there is going to be payback on this in the long term for the US economy. That increase in the fiscal position in the US, it does become effectively a tax on future generations who have to pay it back. And so there's, I think, a longer term play here in terms of, yes, it's going to support the economy over the next little while and, help with the midterm elections for the current administration. But in the future, it does mean you're probably going to see slower growth for the US economy.
Kerry, we're entering the second half of the year, right? We're almost finished with June. And one thing that people are starting to talk about is record issuance coming out from the U.S. Treasury in the second half of the year, which theoretically could, I think, the risk is push yields higher. What do you think?
Yeah, certainly we've seen yields turning in a range for a while now. We think they're going to sit between the sort of 3.75 and 4.5 range. A breakout to the upside, if you saw yields to move to 5%, might actually create a bit more of a buying opportunity, but it also creates some implications for the equity market in terms of those valuations coming through. However, our view is that the market is reflecting that higher inflation that's likely to come through, towards 3% by the end of the year. The market's pricing in roughly around about 2 rate cuts from the Federal Reserve. It might get slightly less than that. We think probably only 1 this year. So there might be some little bit of movements within that bond trading range, but I think the yields will relatively stay there and there will be opportunities should they move higher. I think the bigger issue here, again, and the news that's coming out now is some of the moves the Fed has done to try and alleviate this with the movement around the SLRs and saying we need to provide a more liquidity in the market. Moving those would allow for some absorption of increased supply that come through and at least allow for some of the risks around thinking about credit stress in the economy or liquidity stress in the markets being somewhat eased by that.
Yeah, so SLR, supplementary lending ratio, is what we're talking about for viewers who are not that familiar with the acronyms. Kerry, sounds like overall you are sort of short to neutral duration then for fixed income.
I think for now, we are aware of the inflation risk that could present itself, and so it is about shorting shorter to the end of the curve as we position in the fixed income side of things. We're also quite favourable in thinking about the high yield side of the market, given the yields on there around about 7%, and they think that total return looks pretty compelling compared to what we're seeing in the equity market. And again, think Kerry is a pretty good opportunity in this environment. But again, with that risk around inflation and the fact that, there's been some concerns around bonds as a diversifier in the portfolio, it's generally sitting towards the short end of the curve where we could see the longer end start to move on some of those fiscal concerns or some of those inflation concerns should they rear their head again.